when you look at the world of Bitcoin, there's just so much noise, right? You've got price predictions, social media hype, these endless debates. But what are the real signals? The ones that actually point to where this is all going? Well, today, we're going to cut through all that chatter and decode what truly matters. Okay, let's just jump right in with a massive number. $7.5 trillion. That is a record-breaking amount of cash that is currently just sitting on the sidelines in money market funds. You can think of them like super safe, low-risk savings accounts, but for the big players. And right now, it's just sitting there, collecting interest. And yeah, a lot of people are pointing to this staggering figure as the next huge catalyst for assets like Bitcoin. The theory is pretty simple, right? When interest rates eventually drop, these safe accounts won't look so hot anymore, and this mountain of cash is going to go looking for better returns in, what they call risk-on assets. But come on, is it really that simple? Is this the big story we should all be watching? Or is it just more noise, something distracting us from a much bigger deal that's happening just beneath the surface? So that brings us right to our first job. We need to filter out the noise. Let's start with this $7.5 trillion myth. This quote just nails the hype, doesn't it? You see this stuff all over social media, this idea that a literal tidal wave of cash is just waiting to come crashing right into Bitcoin, sending the price to the moon basically overnight. But, a much better way to think about it is like a pool filter for the entire financial system. It's slowly, over time, catching the devaluing fiat currency. If you look at history, this kind of money never moves all at once in some big tidal wave. It's more of a gradual process as investors slowly diversify. It's not some immediate explosive event. All right, so if that mountain of cash is more of a slow burn than a firework, what about all the wild price predictions? Because that's another huge source of noise. But if you look closely, even the predictions themselves are starting to tell a new story. A story about a market that's finally growing up. I mean, think back just a few months. The chatter was all about these sensational, headline-grabbing numbers, like $250,000. But now, look at this. The forecasts have become way more measured, way more sober. They're all kind of clustering around that $100,000 to $125,000 range. And that, right there, suggests a real shift in how the market sees things. Now, what's really interesting here is, what if the price target isn't the story at all? Maybe the real signal, the thing we should really be paying attention to, is something else entirely: stability. And this chart illustrates that point perfectly. Bitcoin is famous for its volatility, right? Those wild, crazy price swings. Well, get this. That volatility has dropped to levels we have never seen before. It's starting to behave less like a speculative roller coaster and a lot more like a mature financial asset. So, what does this newfound stability actually mean? Well, there's this one really powerful theory that describes it as a coiled spring. The idea is that all this quiet, sideways price action could be building up a tremendous amount of potential energy. Okay, now for our next piece of noise. And trust me, this one is a big one. The never-ending debate over who created Bitcoin. Who is Satoshi Nakamoto? This obsession leads to takes like this one from Tucker Carlson. When he was asked about who Satoshi is, he just kind of throws out, "My guess is the CIA." It's pure speculation, and it completely pulls focus from what actually matters, how the technology works. But here is the perfect counterargument. This is the real signal in this whole noisy debate. At the end of the day, the creator's identity is completely irrelevant. As this slide puts it so well, Bitcoin is neutral technology like math. Who invented math? The entire point of this open source, decentralized tech is that the creator has no special power or control. So, we've filtered through the noise of the cash piles, the price predictions, and the identity drama. Now we get to the real signal, the one that could actually change everything. And you know where it's coming from? Not from social media, not from the markets. It's emerging from the halls of Washington, D.C. Here's the crucial point. There is strong, growing, bipartisan support, that means from both sides of the aisle, to pass major crypto legislation, like something called the Clarity Act. This isn't just talk. This is a real legislative process that could fundamentally change the entire game.
So what would this act even do? Well, it could set off this incredible chain reaction. First, it provides legal clarity. That's huge. This then allows companies to issue their stock, their actual equity, as digital tokens right on a blockchain. This could create a whole new way for companies to go public, directly competing with the old school IPO system. And that leads to the final step. The actual plumbing of finance could start to run on crypto infrastructure.
And let's not understate how big of a deal this is. The source material calls this a sea change, which means literally replacing the rails of the financial system with native crypto rails. We're not talking about a small evolution here. This is a potential revolution in how markets actually work. So what does this all mean for crypto's next chapter? Well, it signals a really profound shift in its core identity. The big takeaway here is that crypto is evolving. It's graduating from being seen as just some speculative casino to becoming the foundational settlement layer for global finance. It's a massive shift from being a place to just make bets to becoming the actual plumbing that future markets are going to be built on. And in this new world, you have real-world assets, like company stock that can live on-chain. Bitcoin, because it's so reliable, can act as that trusted settlement layer for decades to come. And the potential outcome? A financial world that's a whole lot freer and more borderless. So the ultimate signal we should be looking at isn't a price target or a pile of cash. It's a fundamental rewriting of the rules of finance happening right before our eyes. And that leaves us all with one final and pretty crucial question to think about. As the rules of money are rewritten, who is going to build the future?